Horowitz, one of the best-known venture firms in Silicon Valley, with an investment portfolio that boasts of successes like Facebook, Twitter, Groupon. This month, the firm raised an extra $200 million for a fund aimed at these kind of growth investments, bringing the company's total assets under management to $1.2 billion. Now, we should also mention that Bloomberg LP, the parent company of Bloomberg News, is an investor in Andreessen Horowitz. Now, joining us for the hour to discuss Andreessen Horowitz investments and the broader stories influencing technology and innovation here is Ben Horowitz, our first ever celebrity guest, buddy, host person. Thanks for coming up.
Thank you, Cory. It's great to be here.
So when you guys look at the world, let's start with our lead story today. Research In Motion just getting pummeled. Yeah. It was a cheap stock yesterday. It's really cheap today.
Yeah.
You and I talked on the phone about this.
Depending on your definition of cheap.
Well, when you see this, what do you think?
Well, you know, I think from a historical perspective, Research In Motion is starting to look a lot like a company from the early 80s called Wang. So Wang, for those of you who don't remember, built a dedicated word processing machine, and it was a fabulous success until general-purpose computers got good enough at word processing and then radically better at everything else.
I mean, Wang was the computer industry to, digital equipment, and Wang, that was the computer industry.
Exactly. And we're seeing the same thing happen with RIM, where it was basically the smartphone, and it was the best thing for email, ever built. But from a software perspective, like Wang, the operating system is far, far behind what Apple's built with iOS and what Google's built with Android. And as a result, they're in a really, really precarious position right now.
It's interesting, the tipping point here. Who knows how to identify that? I remember talking to money man. I was short Research In Motion in 2005 when I was a money manager, and thinking with that same thesis. This was a great email device. It's not a great smartphone. But it's taken, 6 years from that investment for this thing to really blow up and really, get hurt by investors, for them to see that this might not be the future. Yeah,
and I think, it's not always good to be ahead of your time, especially financially. So it's good to be right on time. And you're right. And it's just taken a long time because, what Apple has built is an incredibly powerful general-purpose computer that fits in your pocket. And that just took, a little while to get right.
When you look at companies and their ability to turn things around, you've worked at startup companies like Netscape, you've worked at battleships like Hewlett-Packard, you've obviously got your fund right now looking at the most innovative companies in the world, or trying to find them. Does a company as big with such a fantastic base of revenues and profits and free cash flow like Research In Motion have the ability to turn it around?
Well, it's very much a leadership issue. So nobody in the industry thought that you could turn Apple around when they were 3 weeks away from running out of cash, and the wheels had completely come off. And
the products were stunk, and the software was difficult to use. And
yes, exactly. So everything had come apart on them, and nobody could figure out a way out. And when Jobs came back, the thing that he did that was the simplest thing of all, which is he just started building good products again. I mean, that was really the difference. It wasn't like, he didn't make Mac OS compete with Windows. He didn't do any of the things that people said he should do. He just started building good products. And so that's a really hard thing to do when you've lost your way.
Well, all that he did. Who doesn't want to make good products?
Yeah, well, it's a really, really hard thing to do. And it's a really hard thing to do when you're in a company that has been building bad products for a while, or products that are not competitive for a while. And I think that's the challenge that RIM faces. And the only way out is through outstanding leadership and and better products, because the products just aren't good enough right now.
Well, all right, perfect segue to talk about Microsoft, the other sort of big player in this world. A company that has never been accused of having great products by anyone that didn't work in Redmond, Washington.
Yeah, well, Microsoft is really an interesting one because they've had a different kind of advantage, which is really a massive network effect monopoly advantage, in that because so many people had Windows, if you had Windows, you could exchange information with more people, you could become more productive, more people had Microsoft Word formats. There was all these surrounding benefits, and and that went down to the hardware layer, where you could get more variety on the kinds of computers you could buy and so forth. And that monopoly is really starting to crack with these new tablet computers.
Well, that's it. It's broken. The dependency is broken.
Yeah, the dependency is broken. And in particular in enterprise, where the monopoly was strongest, where all the employees would have Windows. Now, because they also have an iPhone or they also have an iPad, and particularly the executives who used to have their email printed out and read it or reading it on the iPad, now IT has got to support multiple devices again. And so a lot of the things that you get from going homogeneous Windows are fading. Right. And that's a really, really big change.
Let's get to more of this right after the break. You and I were talking during the break about the last bubble. The bubble of, well, people out here say the last
actual bubble.
Well, people out here say the last bubble as if real estate bubbles didn't even happen. When, of course, it devastated this country and the banking system.
Yeah,
but the technology bubble of 1999, 2000, 2001 really imprinted something on people's minds. What was that, and what's gone?
Well, I think the big thing that it imprinted on people's mind is internet businesses don't work, right? Like, it was like none of them worked. We invested all this money and they all failed.
Pets.com, WebVan are sort of the poster boys.
Yeah, those were excellent
E-toys.
Poster boys, e-toys.
DrCoop.com.
Yeah.
I won't go on.
Yeah, you can if you like. And what's really changed are the dynamics that made those businesses not work. So if you go back to when we sold Netscape, we were the dominant browser share, and we had 50 million users. So and half of those were on dial-up, and that was the market, right? 50 million users, half on dial-up, and then on the other side, to build something like a greeting card, like Evite had 250 employees to build a greeting card. Today that would take one employee, and they would build a better greeting card. And then the audience
put it on Amazon Web Services, and they do it on the cloud, and they wouldn't have the expenses, and they could do it in 2 weeks.
In their pajamas. And then the audience is 2 billion people on broadband going to 4 billion. And so the difference in the market and the difference in the cost is dramatic. And as a result, what we're seeing is these new businesses really working on the internet and getting to massive scale. Hundreds of millions of users. Really important media properties, very important properties in life. And but people still have the old financial assumptions, and they're missing it.
You wrote this great, your blog is fantastic and really informative. I hate reading about management stuff, but you wrote this fantastic thing about, you cited The Godfather, and this great scene where Michael Corleone pulls Tom Hagen aside, who's a longtime consigliere, and says, things are going to, as I recall, I've only seen the movie about 1,000 times, right? Things are going to get tough. You're out as consigliere.
Yeah.
You're a peacetime consigliere. You're not ready for war. You talked about wartime CEOs and peacetime CEOs and how they're important at different times. Explain that as it relates to, say, Google. Yeah.
So, and actually, that's how I opened the piece. Is in peacetime in a company, you're the market leader. You might have a large advantage, as Google has had for many, many years. Dominant, phenomenal search product, and so they've been very, very, very sharp at what I would call peacetime leadership, in that they've innovated extremely aggressively. They've expanded things. They've delegated innovation and responsibility throughout the company. They even have this thing where 20% of your work time should be dedicated to your own projects. That's really, really different than when you've got a competitor that's trying to put you out of business, or we spoke about Steve Jobs when he came back to Apple. He was 3 weeks away from being out of cash. Nobody had 20% of their time at Apple to work on what they wanted.
Microsoft took on Netscape. I mean, Microsoft saw Netscape. Netscape's expanded the world. Microsoft said, we want that.
Right, and it was wartime, and Bill Gates was down there in the product meeting screaming at people, saying, you've got to do this. This is critically important, and everything else, get out of the way. And he violated the chain of command and gave directions at a very low level, and that's wartime. And one of the reasons I don't like management books either that much is the problem with management books is everything reads so logically, and then you get into management and it's all totally emotional, right? There's betrayal, and people are attacking you, and it's competitive, and none of that is in there. So one of the things that one of the reasons I write the blog is just for that, so that you can to put the emotional component back into it, so that
it's a fantastic way to follow it. And you talk about the personal behavior of a CEO needs to be different when you're in peacetime or wartime.
Oh yeah, definitely, because when you're at war, you have very, very, very little room for error. If you make a mistake, and when I was running Opsware, when we switched from the cloud business to the software business, one bad move, one investor selling the stock, losing one deal, and we were done. And so when you have to run at that level of precision, people can't make mistakes. You have to be precise, and you've got to be really, really specific in your instructions. And sometimes that violates most of the principles of management. Now, if you do that all the time, even when you're winning, everybody's going to quit, because nobody wants to work for an a-hole forever, right?
Right. Well, some people get that opportunity.
Yes. Yes.
Depending on the money. But it's just a fascinating, different way to do business. It suddenly, like, all my bosses that I loved and hated over the years started to make sense to me when I read that blog. So I encourage everyone to read your blog. So we're going to keep you around so we can talk to all the rest of the guests we've got in this show, because I'm curious to get your insight.